What's up everyone, Tom here with another video. Today we'll be doing our weekly analysis together of the key stock market news coming up this week, along with our technical analysis levels for the S&P 500, NASDAQ, US dollar index, and gold. This week should have plenty of opportunity. Stay tuned. So one of the first things that we like to do together is to have a look at what happened on Friday and what happened last week in terms of sentiment changes. One of the best ways we can do that is having a heat map that shows us the S&P 500 and some of the key companies in it. So here we have Friday, and I'm sure many long-time viewers will be noticing something straight away. What was happening? We were seeing a bit of a sell-off in Microsoft, Apple, Google and Amazon and those kind of FANG stocks, the ones that have always been very popular. Where was that money going? Well, it was moving into unloved sectors. We saw Berkshire Hathaway move up, some of the banks move up. Obviously, Warren Buffett was purchasing, and that's been disclosed, that he was purchasing Bank of America. People were moving into banks, starting to notice these sectors, and Berkshire just reported and did okay. So people are obviously saying, let's take some profit on these FANG stocks and let's consider buying some of the unloved sectors. We want to then click 1 week, and we just noticed that it seems to be fairly similar across the board. Again, Amazon was not performing last week, but the other stocks performed okay, and generally pretty much any other sector was performing well as well. And that will show in our top-down approach technical analysis very soon. What else do I think is really of concern? Well, of course, the rising tensions between the US and China. And obviously, this will have traders moving out. I know that if you were in Apple and you were locking in a potential 100% gain over the last couple of months, there's no problem with that. Because while Apple's a great company long term, every one of these tech companies is susceptible to this potential tension. What do we know? What are the facts together? Well, one thing that's always happened is whenever the US has done anything or China's done something, there's been a retaliation on that. And of course, banning TikTok and WeChat, most likely there'll be some form of retaliation in the future, but time will tell. What else is happening? Well, we're still in earnings season, but realistically, pretty much all of the companies beat the really low expectations. We've talked about that together. Everybody in the comment section knew that, of course, these expectations were so low that many companies would be beating. So is that really helping us? Not so much. What else do we know? Well, this report here from Yardeni just shows us basically that certain sectors are still unloved. We've got unloved from energy, financials are still unloved, obviously utilities are still unloved. Potentially do your own analysis, find some companies in there that might make sense. Maybe there's some opportunity for you. But what I'm also looking at is what I know Wall Street's looking at, and that is following some of these Robinhood track trades. Just like you and me, we're all investing together right now in the stock market. There's plenty of hype around. And what are people doing? Well, unfortunately, we have a tendency to all follow each other. So what are the general tendencies of the retail herd right now? Well, Apple, Microsoft, AMD, Amazon, obviously the Kodak, Facebooks, all of these FANG stocks have been added to very heavily recently, and we've had those big gains over the last couple of weeks before last week. So with the rising tensions and other things, I do think that some of these stocks might be getting a little bit high. Let's get into the top-down analysis now and start with the dollar index, as it will paint a picture for the NASDAQ and the S&P 500 in a few minutes. So what do we know? Well, firstly, on the weekly here, we've got this 92.55 area, which has acted as key support for, of course, the dollar index. It's rejected that twice as well. And that's interesting because notice how it's rejected as in the wicks up here have moved all the way up. So what does that tell us? Well, it tells us that there's clearly buying of the US dollar down here. And while it's moved heavily, we have discussed a few times about how the previous move really was the same length. So if we take this previous move and we extrapolate that out, notice how these moves are the same length. And that's the way the market likes to move. It likes to move in unison and generally in very similar self-fulfilling prophecies. It's why kind of technical analysis works so well for us in certain situations. What else is happening? Well, I go down to a daily here, and a few long-time listeners are probably understanding what I'm about to say. Could we be seeing a double bottom here on this particular dollar index. Well, if we scroll down into the 4 hour, it certainly seems that way. You could put a whole bunch of different indicators on. I'm sure they're all saying divergence and all of those types of things. But the key thing is we've got the base, we've got the intervening up here at this kind of 94 area, and we've got, of course, our moving averages. So if the dollar index continues to strengthen, breaks and closes above the 94, that really is showing us momentum in the bullish area or the bullish zone. And that could mean dollar strength on for multitudes of different currencies. And of course, it could mean something for the stock market as well, as if we're seeing a strength in the dollar index, often that does correlate with a weakness in the S&P 500, NASDAQ, and other equity kind of investments. So what about the S&P 500? Well, let's do our top-down approach together right now. As many of you know, we like to go from the monthly to the weekly to the daily and possibly even to the 4 hour. And what's happening on this monthly? Well, we are fast approaching all-time highs. So that 3,400 is fast approaching. We spoke last week about how when we got through that key resistance last week, we were pretty much triggering the 3,400. The monthly is not showing us too much other than it was a strong week and we continue to see bullish candles. But when we go down to the weekly, here it is. So I'm going to zoom this in a little bit. Here's the line that we were talking about. So when it got past that 3280, what it was signaling is that it was breaking past a shooting star, or many people will know it as a pin bar. So what do we know as a pin bar or a shooting star candle? They're generally rejection candles. They're showing us bearish intent in the market. But when the market gets through those zones, it usually means incredible strength. And of course, we're using here the real market, the SPX. So we want to be always doing our weekly analysis on not the futures, but generally doing it on the real market and where the real volume is. So we've got a strong break there, and that really triggers off pretty much that 3,400 zone. When we go down to the daily, what's happening? Well, we go down to the daily, and it's showing us, again, nice bullish kind of candles, nothing really to see here. In terms of alert levels, what does everybody think? Well, I think everybody will probably agree previous resistance, being that 3280, could be good support. So what we might see is we might see the stock market come down a little bit this week and potentially test this 3280 zone. We might see a little bit of buying at this area, and then of course strength back into the 3,400. That would be the typical thing that's going on right now. If we add a few moving averages onto this chart as well, and we even put a trend line on this, you'll notice why this area is pretty key. It's all going to intersect together if that was happening. So you're going to have previous kind of lows, and you'll have some moving averages, I'm sure, at around this level. So on the daily, that's what we're seeing. When we go down to a 2 hour though, I think it becomes pretty interesting because we did see bullish movement after the non-farm payrolls, after those strong jobs reports coming out of the US. Now, whether we want to believe those are real or not, we've discussed on this channel a few times how they're kind of manipulated figures and they don't necessarily show us the true impact of the virus on, of course, the US economy. It does present us with an interesting idea, and that is that we have a bullish movement here on the US 500 going into the end of the weekend, while we had a bearish movement on the NASDAQ. So here's the NASDAQ and the analysis we did last week, where we talked about the channel. We talked about between 10,500 and 11,000 and how when it broke through there, it was going to show strength. We spoke about how it would probably come back down at some point and give us the conservative entry, which it did before the weekend. And more interestingly, this really shows you that it wasn't necessarily the big tech stocks that actually drove the market up, at least on Friday. And most of the week, actually, we did see Amazon was not that strong. So the US 500 here is trying to break a new high. Let's see if we can do it on Monday. Obviously, that would pretty much signal almost a shoe-in for the 397 area, just because we've got so much strength. But you never know with the markets. Obviously, it's all statistics and we're trying to play that game. So I've highlighted down here that 32 kind of 80 zone, highlighted that in the box. Obviously, the 3400s highlighted for alert levels. And where we are at the moment with the NASDAQ is also highlighted, because on the 4 hour, what it's really showing us is it's coming down, it's testing those previous resistance levels that are now acting as support. So very interesting key levels here on the markets for the week ahead. And that's the type of thing that we're looking at right now. What about on gold though? Well, gold has had probably the biggest move, the most interesting move. Let's do a bit of top-down analysis on that right now. And I'm going to leave these lines here, and I know it might annoy a few of you, but I just want to do it to show you some of the key breaks. So first things first, we are incredibly far away from the 20 exponential moving average. What does that mean? Well, it means that generally speaking, the market might have a big move off like it does here, but then eventually it has an excess and a distribution phase. So that's that final phase of the market where effectively profit taking is had and the market needs to cool down and usually kind of trades in a range. So have we reached that on gold for the short term? Well, 2 weeks ago, we had a bit of a blow off in gold. It shorted off heavily, but usually you know when you're at the end of the trend because it generally does a very wild movement. So we might see, let's say $200 or $300 off this particular gold index in only a matter of day or a few hours. When you see something like that, usually you're reaching kind of a peak. It'll go back up, test it, or get very close to testing it, and then start consolidating. So on the weekly, pretty strong for now. We know we're through that 2,000 key barrier. When we go down to the daily, we can see here that it's pulling back, which is pretty important, and that it hasn't quite reached the 2,000. We can also see that it broke through, remember, at the 1980. So we know that previous 1980 resistance is going to act as strong support again. Go down to the 4 hour, what do we see together? Well, we have this 50 moving average coming in to where the 2000 is. So we might see together basically the 2000 being reached at the same time that we see the 50 exponential moving average hit. What do we have underneath that? Well, we've got a lot of previous resistance at the 1980 as well, acting as support. So for gold bulls, the good news is that we are having pretty good key support, key psychological zone, and then underneath that, we've got that 1980 as kind of like a backup in case it doesn't hold that level. So a few levels on gold here as well for the next week. What else are we seeing? Well, it's always important to understand the major economic reports that are moving ahead. And I actually did a non-farm payrolls live stream, and I hope to do another live stream tomorrow for the Bell Open. So make sure you do stay tuned for that one, and I will set up a preset for it tomorrow so you can follow along. Basically, I want to do some analysis coming into the market open, share that with everybody, and talk about some of the key news as well. But for the week ahead, you always want to know the key information that's coming out. We still are in earnings, but the big ones are done. And realistically now, it's just a whole bunch of different little bits of US news. Obviously, we've got things like the budget. We've got things like the unemployment claims, which are coming in every week. They are moving the markets in terms of sentiment, and a whole bunch of retail sales and other things on Friday. So there's a decent amount of little bits of news that are all going to impact based on the general consensus of this information. So far in the US, we have seen the stimulus and all of this fiscal policy acting positively towards the market. But that doesn't necessarily mean it's going to continue going. So of course, watch all of this, but realistically from the technical levels, it's still bullish this week. It would have to get under those key role reversal zones. For the S&P 500, we'd be needing to see the market get under 3280 to really expose those other levels. And for the NASDAQ, we'd need it to get under that channel. So if it holds above that kind of 11,100 area, then I would say that it's still going to be pretty bullish for now. So hopefully that helps everybody. If it did, remember to smash that like button and of course subscribe. And I'm really appreciating everything the community is doing right now for this channel. So just a big shout out to everybody out there. Thanks very much. Stay healthy, stay profitable, and we'll see you in the next video. Bye for now.